Hey there, TRASTRA fans. Lots to talk about. Changpeng Zhao gets 4 months versus prosecution's demand for 4 years. Michael Saylor's appearance at the Bitcoin for Corporations event in Las Vegas of all places. The timing on Labor Day and the location and the ticket cost couldn't be more symbolic. We'll definitely talk about that. We'll discuss Bitcoin's taking a bit of a tumble to the lower 60s, a steep fall from last month's high of 73. After the April 19th halving, BlackRock and other major players witnessing the first outflows from US spot Bitcoin ETFs, a substantial over half a billion dollars in a single day, pretty freaking amazing. Tether's triumphant Q1 earnings report and its investments in biotech. In my view, it's even scarier than its move into AI we discussed in previous episodes. Jack Dorsey's block, the company behind Cash App and Square, is under federal investigation for potential non-compliance with financial regulators concerning anti-terrorism and sanctions. Poor Jack. Circle's USD coin surpassed Tether in transaction volumes. It seems unreal, but perfectly explainable. We'll discuss that. And of course, Roger Ver, also known aka Bitcoin Jesus, arrested for tax fraud. I mean, in my view, it's a grim reminder to Bitcoin sovereignists that I mentioned above, Michael Saylor and the rest of them, you know, that deluding oneself into thinking that Bitcoin is this magical source of the ultimate civil and financial freedom is, well, it's kind of childish. Well, it's not childish on their part. It's wholly misleading, but we'll talk about that later in the video. Anyway, I'll drop as many links as I can find in the description. Remember to like, share, and comment on our content. Be sure to join our Telegram community and follow us on social. And now let's dive into episode 110 of your beloved TRASTRA Newsreel. Michael Saylor took the stage at the Bitcoin for Corporations bash on Labor Day of all days, and in Las Vegas, which is even more symbolic. The event, essentially, it was a MicroStrategy benefit. It was indeed rife with symbolism. Another example is the ticket price, $1,500 per head, which tells you a lot about the closeness of hardcore corporate Bitcoiners to the rest of us regular crypto folk. Nevertheless, the content this gathering produced is absolutely marvelous. I highly recommend Saylor's hour-long solo performance titled "There Is No Second Best." I'm sure you're familiar with the title, as well as both his panels with David Marcus, former PayPal head honcho, who works for MicroStrategy now, and Michael Saylor sit down with the rest of MicroStrategy's C-level execs, Andrew Kang and Feng Li. Essentially, the entire discussion revolved around payments, which I think is the reason it's relevant to TRASTRA crowd. But they're still trying to convince us that Bitcoin is an ideal protocol for becoming money, on top of being a means of capital movement. While praising its digital goldness and it being a superior commodity. I mean, I could never understand this logic, but it doesn't seem to bother the maxis. I mean, pay for things with Bitcoin, use it to store value, use it to store wealth, and invest in it as a superior commodity. I mean, all this in one sitting. I mean, it just doesn't bode well with me. I've never heard of people, paying for things with tokenized shares of their Tesla stock, for example. It's ludicrous. Anyway, I'll drop the links in the description. Check it out. Like I said, it's tons of fun to watch and very informative. And if you're still wondering about the reason Bitcoin is now in the lower 60s instead of its glorious high of 73 a month ago, I mean, I'm still trying to forget that drop to 59, the drop after the halving and all the pressures such as high inflation and the Federal Reserve's interest rate policy. So if you're still thinking about all that and trying to find a reason, well, this may be presented to you as an official reason. BlackRock and other issuers have experienced the first outflows from US spot Bitcoin ETFs, marking a significant downturn in the sector. All 10 ETFs saw outflows on last Wednesday, accumulating a loss of $563.7 million, the largest since these funds went online, started trading in January 24. Over the past month, these funds have collectively lost about $6 billion, approximately 20% of their assets under management. I mean, that's a lot. BlackRock's IBIT, the most successful among them, saw its first outflows, losing $36.9 million. Fidelity's FBTC and Grayscale's GBTC also reported substantial losses. Bloomberg likens this situation to a band putting its music on Spotify. Accessibility increases potential audience, but the product itself must drive sales. And the product in our case, I might add, is wholly weird and still relatively unfamiliar to, or too risky for the vast majority of institutions. Tether has committed $200 million to BlackRock Neurotech, acquiring a majority stake in this biotech firm known for developing brain-computer interface technologies. I have no idea what that means, but it sounds really scary. I mean, they launched in 2008 from the University of Utah, and they specialize in devices that enable interaction through thought for individuals suffering from paralysis and neurological disorders. And we all know what that means. It's like a dozen individuals will get their cure while the military-industrial complex will lay its mitts on it. Fuck, I don't want to think about that. According to Tether CEO Paolo Ordonio, the investment is funded from profits and signifies Tether's expansion into data, finance, energy, and education, all the while maintaining its core focus on stablecoins. Yeah, no crap. Anyway, obviously Tether can afford it after reporting a record-breaking net profit of $4.52 billion in the first quarter of 2024, marking its highest profit in a quarter to date. The profits were primarily fueled, according to Tether that is, by the firm's substantial holdings in US treasuries, which now exceed $90 billion, and market-to-market gains from its Bitcoin and gold positions. The firm's first quarter attestation report highlighted a notable increase in group equity, reaching $11.37 billion as of March 31st, 2024, up from $7 billion at the end of December 2023. Additionally, Tether increased its reserves by $1 billion to further bolster its stablecoin offerings, bringing the total reserves to nearly $6.3 billion. I mean, there's a lot to unpack there. I encourage you to research this subject. Federal prosecutors are investigating Block, the brainchild of the Jack, the Twitter Jack, and a parent company of Cash App and Square. So they investigate Block for potential financial compliance failures related to sanctions and anti-terrorism financing. Internal documents provided by a former employee suggest that Block processed transactions linked to terrorist groups and countries under US sanctions, including Cuba, Iran, Russia, and Venezuela. The documents also indicate that both Square and Cash App failed to perform adequate customer due diligence and risk assessments. Block reportedly did not report many of these transactions to the governments as required. The company has responded, stating that it has a robust compliance program and continually works to improve its practices. This investigation follows previous allegations and regulatory actions concerning compliance issues within the company and its operations. Yeah. Circle stablecoin USD coin, better known as USDC, has surpassed Tether USDT in transaction volume, becoming the new market leader according to recent data from Visa and Allium Labs. USDC's transaction volume reached $455.5 billion last week, significantly higher than USDT's $88.5 billion. Since the start of 2024, USDC has represented about 50% of the total stablecoin market's transaction volume, even though USDT still holds a larger market share by capitalization. USDT stands at about 70% of the entire market. So the shift in transaction volume may reflect a change in user preference, with USDC being favored by regular transactions within the US, whereas USDT is more commonly used outside the United States as a dollar store of value. Additionally, the online payments platform Stripe has reintegrated cryptocurrency transfers supporting USDC on networks like Solana, Ethereum, and Polygon. Circle has also collaborated with BlackRock, which recently launched its first tokenized fund, further integrating USDC into broader financial services. Changpeng Zhao, the former CEO of Binance, has been sentenced to 4 months in prison after pleading guilty to violating U.S. anti-money laundering laws. The U.S. authorities accused him of ignoring transactions linked to child sex abuse, illegal drug trade, and terrorism. This sentence came as a reduction from the 3-year term sought by prosecution. Zhao, previously a prominent figure in the cryptocurrency sector, also agreed to a $4.3 billion settlement with Binance over related allegations. The Department of Justice highlighted that Binance had processed virtual currency trades worth nearly $900 million that violated U.S. sanctions, including transactions involving designated terrorist groups. Despite his defense arguing for no prison time due to his efforts to comply and enhance Binance's anti-money laundering measures, the court ruled a prison sentence was necessary to uphold the law's integrity. BlackRock has led a $47 million investment in Securitize, a company that focuses on the tokenization of real-world assets like money market funds, stocks, and fiat currencies, among others. I mean, I'm sure they're into real estate and all that. This move is part of BlackRock's broader strategy to integrate digital assets into traditional financial markets. The funding round also saw participation from Hamilton Lane, TradeWeb Markets, and Parify Capital. Joseph Chalom from BlackRock will join Securitize's board, enhancing the strategic partnership between the two firms. Securitize, which was co-founded by Carlos Domingo in 2017, has been at the forefront. I remember them vividly. I think I have an interview with Carlos Domingo somewhere on one of my YouTube channels. Anyway, they've been at the forefront of asset tokenization since at least 2017. I mean, they've worked with Morgan Stanley, KKR to launch various tokenized products. With the new funds, Securitize plans to expand its licensing terms and explore new blockchain platforms like Aptos. Bravo. And finally, Roger Ver, an early Bitcoin investor often referred to as Bitcoin Jesus has been charged with tax fraud, including mail fraud, tax evasion, and filing false tax returns. The charges were unveiled following his arrest in Spain, with the US seeking his extradition for trial. According to the indictment, starting in 2011, Veer accumulated around 131,000 bitcoins through his companies memorydealers.com and agilestar.com. Here's where it gets interesting. Despite renouncing his US citizenship in 2014 after acquiring citizenship in St. Kitts and Nevis, he was obligated to report capital gains and pay an exit tax on his global assets, including his bitcoins. The indictment alleges that he provided false information undervaluing his assets significantly, which resulted in the filing of incorrect tax returns. In 2017, Veer reportedly sold about 70,000 bitcoins for around $240 million, but failed to report the gains or pay taxes on them, leading to an alleged loss to the IRS of at least $48 million. Wow, so he sold $240 million worth of stuff on which he had to pay $48 million tax. That's fucking crazy. The case is currently under investigation by the IRS Criminal Investigation Cybercrimes Unit. Anyway, I said that in the beginning of the episode, and I'll say it again. I mean, this illusion that Bitcoin is kind of a universal pass to universal freedom and self-sovereignty is a fluke. People don't believe that. It's a ruse. It's not true. Anyway, thank you so much for watching. Make sure to subscribe to our channel, watch our TikToks, and I will see you in the next video. Peace.